state of the UK looks pretty good right now.
Yeah, I mean, we've seen light at the end of the tunnel before, and this time it actually looks as though it might not be an oncoming train. We've had a good run of positive economic data now for the last two and a half months, and yeah, things are actually looking as though the UK PLC might have turned the corner.
We, as you heard, we're teasing the HSBC numbers with this lack of drama line. Yeah. On the back of RBS, Barclays and Lloyds. Is it going to be a total lack of drama?
Well, HSBC has been popular as a pick because it has been, if you like, so boring and reliable, and its balance sheet seems pretty much impregnable. The one thing that I might be looking for is perhaps any signs of stress on its Asian asset base. That's certainly something that was hinted in the numbers from Standard Chartered, and clearly there are still issues out there in terms of China, India, and the broader emerging market complex, which continues to underperform risk assets globally this year.
As you've said before, G3 right now is all pointing in the same direction, the right direction. Is it going to be bullish the rest of the summer?
It certainly has a sort of melt-up feel to it, doesn't it? I can't see anything that might obviously upset the apple cart. I suppose Italian politics might be a wild card, but as far as the Eurozone is concerned, one of the most striking things over the last few months is just how rock solid, well-behaved the periphery has been. You've seen the core periphery spread hardly move, even whilst the US bond market was going into cardiac arrest, and you've seen a similar rock solid spread between high yield and investment grade. So at the moment, it seems to be steady as she goes.
And just to finish up with, which camp are you in when it comes to the US? The numbers, the GDP, the payrolls, and then the tapering.
Yeah, well, I mean, I think it tells you that the US isn't out of the woods yet. And actually, I thought the market reaction to the second quarter GDP number was somewhat perverse, because if you look at all the various backward revisions and the changes in methodology, it does indicate that there isn't actually a great deal of momentum in the US economy over the last 6 months. And I suspect that those hoping for a taper in September might be disappointed, and that perhaps means that the US bond market might enjoy a bit of a rally over the next month or so.